Busy 6 weeks for you. So let's go through the timeline if we can just a little bit. You were looking for a correction, got one. Then you got constructive tactically just for a moment, and now it's fade the rally. Is that right?
Exactly, yeah. The broader narrative has been one where we've been more cautious on the equity market, but we just think that it's a market where you have to be nimble, you have to be reactive. We saw a 10% correction, high to low. We thought the market was oversold, and it left us vulnerable to see a little bit of a reversal. We've seen that, and now we think the right call is to fade the rally again.
Why is that? Why is that the right call right now?
So we think we've seen a correction that's really based on a normalization in terms of rates, a normalization in terms of positioning, and we think the driver from here is more likely to be the bottom-up equity fundamentals, and we think that we're still in a downgrade cycle. And when we look out to 2024 and the bottom-up estimates, to us they look way too high, and one of the takeaways from the Q3 earnings season is that analysts are starting to take those numbers down, and we think we're in a downgrade cycle into the back end of the year, and we think that's going to just weigh on US
Talk about the bull call starkly opposite of you in breadth. They're assuming breadth comes on, right?
Yeah. So I think one of the obviously standout features we've seen has been this absolute lack of breadth from equity markets this year. And this recent relief rally that we've seen hasn't really shown any signs of that improving. And when we look back at Q3 earnings season, there's no signs of that breadth improving there either. I think one of the most startling takeaways from Q3 earnings season was the extent of the downgrades further down the market cap spectrum.